Good afternoon, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, I wanted to start off by looking at the spiders. Now, of course, this is a very common ETF, and the main reason that it came up for me, or at least why I decided to cover it in tonight's free video, is because it was one of the first results that I had out of one of my favorite scans, which is I'll show you a quick preview of it here. But it's a service that we have on Simpler Stocks, and it just basically gives you all kinds of information, and one of my favorite scans to run are these daily bullish nested squeezes. Now you can see we've got a lot of different ones to look at, but for the sake of the free video I would like to focus on SPY. So when I know that this is one of my first results, or an area that I need to focus on, what does a nested squeeze mean exactly? Well, the nested part comes from being inside of a squeeze that is bigger than the one that we're currently evaluating. So in this case, I would come back and point you to the weekly squeeze, where you can see that if you come back here to this point, and we've been going through this for a couple of weeks now, but this is the point where that squeeze had fired long and continues to maintain this momentum. Now when you come back to the daily chart, you'll notice that this squeeze is still in play, and while things can change on a dime, and while, admittedly you can say that this has come quite a ways, I still think that trading this with the trend is the best way to bring clarity to your setups, because when you look at this and you try to decide which way to go about it, maybe it does drop, but coming in and buying a directional put at the current prices where the skew is so elevated means that you're really going to be paying up for those put options anyway. So if that's how you're going to play it, I would encourage you to play it through a vertical, though I'll continue to focus on the buy side. Now, a couple other things to help complement just being above your broad moving averages, having the weekly squeeze that moves in your favor, is also coming over to take a look at the transports. Now, we've been discussing this for the longest time because you got into a very similar situation back in here. You can see that we have a squeeze that has been consolidating for some time. There's a couple of these. These are the main two that I was pointing to. So here's one and here's another, both of which off the daily chart. But you can see how when you have a weekly squeeze that is fired long, overall, trying to play the daily squeezes in the opposing direction is a tough game to play. It's not to say that you won't have little drops, but generally speaking, those are very quickly purchased, and then this goes on to facilitate the bigger rally. If we look at what's going on right now, I feel like this is a very similar situation. You make the advance, digest that for some time, and then continue on with the trend. So I will continue to look for the S&Ps to continue to hold a bid. Now I'm not going to be aggressively playing them through SPY, but it's a market that I will definitely be following for exposure to some of these other places. And then a couple other spots that I thought I would just reference because it's still not terribly clear, and I'm working to piece each of these together. But if we're going to say that the SPY has a general bullish trend to it, you'll also notice that the put-call ratio is creeping up on 1. Not quite there yet, but if we can get there, I will see that as being a contrarian indicator. If everybody is loading up on puts, that's exactly the fuel we need to drive that higher. And those are two charts that I'll be keeping in focus this week as we work to dissect the S&Ps. So I hope you find that helpful. Hope you have a great rest of your Monday evening, and we'll touch base at the next free video.